Mr. Y. Sikri, Managing Director of RPG Life Sciences, joins us now. Well, we've got the range of RPG Goenka Group companies on channel today because all of them had Analyst Day. So we're going to shift from SEAT, which is the tire company, to RPG Life Sciences. Mr. Sikri, good morning. Thank you for joining us. Walk us through, sir, first the big picture. For those who want to understand that what is in store for FY24 from RPG Life Sciences, what they should expect, what curve of the business cycle you are in, and how will this year be different from last year?
Morning, Nikunj, and thank you so much for getting me on the show. And if you allow me, I think before I answer your questions, a little bit of the background is important, if you allow that. So that people get the perspective of this year as well as the next year. The RPG Life Sciences is around 55-year-old company. It is a unique history. It was earlier Searle India Limited, which was a joint venture between RPG and Searle. Towards the late 90s, Searle exited the country and the company became as RPG Life Sciences. Now, this background has some unique points in favor of, or maybe some negatives of, RPG Life Sciences. So one is, company of this size would have never had representation in all the three segments, which is domestic formulations, international formulations, and API, but this company has. Number two, we have plants. We have plants of API, we have plants for formulation. Ankleshwar is formulation plant, and API we have in Navi Mumbai. Being the company for 55 years old blesses us with systems and processes, experienced people, and a certain kind of loyal customers, which we have in our fold. Very important point is we got certain very great brands, which we call as textbook brands, in our fold. And lastly, the strong RPG parentage. So what we have tried to do in our strategy, we have tried to see that we maximize on all of these things. So with 67% of our business coming from domestic formulation, 18% coming from international formulation, 15% coming from the API formulation, obviously we decided to focus on the domestic formulation, which makes about 2/3 of our business. And that's what we have done in the last 4 or 5 years. And consistently, we have grown faster than the market, considering all the issues and opportunities, we figured out some 5 pillars for our growth in domestic formulations. And those 5 pillars are a little important for viewers to understand, so that answers the question going forward, what our strategy is going to be. The first thing was, being an old company, we were loaded with old portfolio, so we had to rejuvenate our product portfolio. Number 2, we had great brands, so we had to make sure those brands have brand equity, but those brands have to become big brands or mega brands, which we call as strategic asset. And the third one was productivity. We had to work on our productivity, and the last one was, if you're working on productivity, our customer coverage must be to the tune of 85 to 90%. And the last one was the profitability improvement or cost reduction. So first one, portfolio rejuvenation. We have identified close to over 40 products. We have a 3-year new product grid in place. Accordingly, we are launching the products. Today, the new products are contributing about 28% to the domestic formulation sales. Productivity, we have moved from...
I have a simple question, sir. In last 5 years, your profit has gone from 11 crores to 50 crores. Will this kind of a trajectory continue?
Yeah. So if you look at last 5 years, consistently there has been an improvement. Basis how it has happened, it's basically because of the structural issues which we address. So expect the profitability to continue because of the structural areas which we address. If you allow me, it is basically the organization structure optimization, formulation re-engineering, looking at each process so that those processes are cost efficient. All of that helped us to improve the profitability, and I expect that to continue.
So let's put this into numbers, because your domestic business, as we understand, Mr. Sikri, has grown by 20% versus IPM growth of 8%. What is the scalability headroom, say, in the next 1 to 2 years?
I think important question. The reasons why the growth has been higher than the market, those reasons continue, which I just mentioned. The series of new product launches which we have planned out will continue. The life cycle management for existing products will continue. Just give you one illustrative example. We had a brand called Neprosin, which is what is a textbook product, which is a pain reliever brand. We were around 18 crore in FY19. Today we are at 62 crore. And that's thanks to the life cycle management strategy. This is just one illustrative example, just to assure that how the scaling up will continue going forward. Second, scale up will come from inorganic opportunities. Today, we are a debt-ridden company. Minus 15 crore was the debt in FY19. Today, we are a cash surplus company with around 115 crore cash available to us. So we have now emboldened ourselves to be finding out the M&A opportunities for us. And I should share with you that we have last 1.5 years, we have evaluated close to about 18 opportunities. We have submitted bids for about 2 opportunities, and we are active in that space. And hopefully we should be able to have some deal going forward. It fits into our criteria set. Second is we are also looking at the adjacencies in the medicine space. So we have a strong rapport in certain class of customers like nephrologists. So we like to maximize or optimize our relationship with them by offering some other product offering which they are interested in and they will prescribe. So there's another way to look at domestic formulation business growth. And the third one is new therapy. We are entering into new therapies. We were only in general medicine business. We are only in nephro. Today, I'm pleased to share with you that we have representation in rheumatology, we have representation in dermatology, and on the mass business side, we have representation on the cardiology, diabetology, and urology. This also gives us a better profit margin because chronic is better placed than acute on the profit margin. So these are the few points which I can indicate with respect to domestic formulations.
Great to hear that, Mr. Sikri, and so glad that you could take time out and join in today.
Thank you.
Thank you so much. Okay, that's the word coming in from the management of RPG Life Sciences.